Assalamualaikum and a very good day to all of you out there. Welcome back. This is the second part of the video presentation on the preparation of a published financial statement, namely the statement of profit or loss and other comprehensive income, the statement of changes in equity, the statement of financial position, and the notes to the financial statement. And our focus is on notes on PPE. And now in our previous video, what we did was that we stopped at the calculation for depreciation. And remember, we were doing the additional information number 1. I've already shown you regarding the journal entries. So if you can see again the calculation for the depreciation, if you can go into detail for a while, the percentage on depreciation is 2% on cost, which implies straight line method. However, if you come across any residual value given, make sure you are going to go and deduct that residual value from the cost. In our case here, for depreciation of building, 975,000 times 2%, and that 2% here should also be understood that that is also for 1 year. Why 1 year? This is going to be the previous building. So previous building, basically it will be charged for a year, even though it is monthly basis. For the building that has the new acquisition, for the previous building, if you can see plant and machinery, it was charged for 1 year. But for the new acquisition that is based on information number 1, that you have here, information 1, right? That one will be based on 4/12. 4/12 means this is charged with the 24,000 times 10%, and from 1st of September until 31st of December. This is from 1st September until 31st of December. From that period, that is 4 months. So for that 4 month, right, for that 4 month, that you're going to charge 1,005. The same thing is for the new acquisition of the depreciation for motor vehicle, where you also charge 4 months because it was acquired on the same date. For the existing motor vehicle, you are going to charge for full year, right? So what you are concerned is the total for the depreciation for this asset, which is one is for motor vehicle, another one is for plant and machinery, and the asset building is also depreciated. And that is the figure that you will include in your working session here. Okay, this section here that you have, I am highlighting it, right? Okay, that one is for information number 1. Information number 3, 1.3 is on revaluation. Sorry, on the revaluation, we have already done that. Yeah, where we did the revaluation earlier, much earlier. Information 1.3. Now we go on to information 2. Information 2 is regarding provisions that need to be made, which is for auditors' fees. This is accrued auditors' fees, which is your current liabilities that you need to go and provide. And there is also some accrued interest that are for the loan from MARA. Loan from MARA is a liability. This one, loan from MARA, it is a liability, right? But the interest on loan, yeah, is an expense. However, the interest has not been provided in full yet, right? Interest is not being provided in full. The interest was just being provided, perhaps half of it. So we need to go and check if there are any loan interest that needs to be provided. But we need to go and check if there is a loan interest or loan interest expense, or it is an interest revenue. Okay, here if you can see, yeah, that was an interest expense. So you need to go and check what are the 10% interest. So we need to go and do that. In a short while we'll be doing it. And also the fixed deposit. For the fixed deposit, we need to go and look at what are our interest income. For the loan that we took, it is an interest expense. But for the investment that we made by way of fixed deposit, that is on 2nd of April, yeah, which is after 3 months in the current year. That one need to be also provided for its interest income. So let's do number 2. I've done number 2 for you here. Yep. let's just look at it. Okay, information number 2. This one I will highlight later. Okay, information number 2, for the audit fees that you need to provide, you need to go and debit audit fees. And when you debit audit fees, this will go to your admin expenses, right? Admin expense. So admin expense will have to be added because that is an part of audit expenses is your admin expenses. And the accrued audit expenses is your current liability. So later in your statement of financial position, you must include this as current liability. The second information is on interest on loan. Remember interest on loan from MARA. So the interest on loan from MARA, if you look, the loan itself, right? Loan itself is 300,000, the principal. If you can check in your trial balance here. So go and check your trial balance. You can see that the interest loan from MARA is 300,000. The interest that has been provided is 22,500. And you are informed that the interest should be provided at 10% here. 10%. So therefore, you need to go and check whether the interest have been provided correctly or not. So to do that, if you look at 10% times 300,000 for one whole year, that one will give you around 30,000. However, the company has only provided for 22,500. So meaning to say that this one will give you 30,000. So if the company provided equal to 30,000 already in the trial balance, you do not need to provide for the interest accrued here. But here it is not enough. So the difference between what you should have provided with what you have provided, which is 22,500, is going to be your accrued interest. So your accrued interest is going to be your finance cost. So it will be included in your finance costs working. Your finance cost, which will be in your workings later, I will show you, right? And again, the accrued expenses for interest will be under your current liability. Then there's another one regarding investment income. Investment income here. So for the investment income is related to information number 2, but that was for the part in number 3, the fixed deposit that we made. So when we made fixed deposit, we are entitled to an income from our investment, which is an interest income, right? So the interest on fixed deposit was 4% given here. Interest on fixed deposit. Okay, 4%. Okay, so 4% from 200,000 is 8,000, right? 8,000, meaning that per year you should have got for 8,000. But now what you need to see is for your information that the deposit was not made for for 1 year. It has been made just for around 9 months. Why 9 months? Because it was made on 2nd of April. So because of that, what we need to do is we need to understand that the interest will being calculated from 2nd of April up till 31st of December. So that was for 9 months. So if you calculate that, you will see that the interest has not been provided for, because if you can check in your trial balance, there are no accrued interest revenue given. For interest on related to expenses, yes, but for the income, none. So we need to provide. That was an accrued interest, which is your current asset. So you'll debit accrued interest income or interest revenue on fixed deposit, and you will credit interest income on fixed deposit. And your interest income on fixed deposit is actually your investment income. So your accrued interest income, yeah, this one will be under your current asset, but the interest income itself will be under your income from investment. So this will be your investment income, meaning that this is going to be investment income. Where will it be? It will be in your statement of profit or loss. It will have its own line item. So this will go to the statement of profit or loss, and this one will go to the current asset section in the SOFP, right? So in the one that goes to the statement of profit or loss, right, we try to make it different. We just use blue for that. Okay, that one will go to statement of profit or loss. Okay. All right. Now, done with that, go and do what you have done. So audit fees should be in the admin expenses. Now go and put that. Okay, put that to your working. Go and put in your working. So your working here, you have your accrued interest loan, accrued audit fees. So let's just open it up for you. And that one would be the amount that we have calculated just now, 38,000 for the accrued audit fees that was given in the question. For the loan, it should be put under the that should be put under your interest, should be put under finance cost, right? 7,500. Accrued audit fees under admin expenses. Okay, done with that. Now let us look at the part on investment income. Investment income will be here. And if you can see the notes that I put here, yeah, investment income can also be in the form of dividend or whatever interest that you receive from your investment that you made in other companies, share or debenture. So this, in our case, we are talking about this deposit, fixed deposit that we have here, the fixed deposit. Yeah, fixed deposit, the one here. We are talking about what income from fixed deposit in our case, right? Next, okay, after you have done that, now what you will do is you will now go and put that in the statement of financial position, yeah, the part that relates to the income, yeah, where it is related to the income here is accrued income here. So our accrued income here is going to be accrued income. I put here accrued interest income. 6,000 from our journal entry, debit accrued interest income. Another one will be from our audit fees and our interest loan, interest on loan. Here you can see the workings that I put in my box here. And that one will be 45,500, which is coming from 38,000 audit fees, loan, interest, both are accrued expenses, right? Okay, next is to do the last few item. Our last few item. Okay, remember one more thing that I have forgotten just now is on depreciation. Sorry, yeah, I have forgotten about where to put the depreciation apart from just putting them in the admin expenses and distribution expenses. One more thing that you need to understand is that this total also needs to be put in your notes to the PPE, right? This one you need to also include in the notes to PPE as well, not just in the statement of profit or loss, but it must also be put in the notes to the PPE. Okay, notes to the PPE, same goes here. You need to include where in the depreciation charge in your notes to the PPE. Right? So these are all the things that we have done earlier. Right, those are all in the notes to the PPE. So the same thing should have been done for our case of depreciation. For the journal entry, you can check. I've provided the journal entry here. So these are the things that you are going to put in your notes to the PPE. Yeah, later. I'm going to show it straight away now. These are all to be in the PPE as well, not just in the working. Okay. Notes to the PPE refers to the depreciation expense, right? Why do we do so? Because that one was being accumulated depreciation was being credited. So let's go to the notes on PPE. Okay, here it is. You have the information on depreciation here. And these are all your information on depreciation, which you calculated earlier. And this column here is the last column that I put as total. For your information, you don't have any elimination of accumulated depreciation in your question. Why? Because you have no disposal or revaluation of the PPE. So if you can see in my little notes here, if you have any accumulated depreciation that you will remove, meaning that if you have anything that you need to go and deduct, less, I put here less. Okay, that one will be from the revaluation exercise, as well as if there is any derecognition or disposal, but in our case none, right? So we include only the depreciation. We are done with the balance for our accumulated depreciation. We are also done for our PPE at cost or valuation. Why? Because there are no revaluation deficit. There are also no disposal or derecognition. There are no need for you to go and eliminate any accumulated depreciation, because to start with, there are no revaluation that relates to depreciable asset. You have the revaluation, but revaluation relates to freehold land, and therefore you have your item for your costs of PPE, each of them. Remember, for freehold land, it is not at cost, it is at valuation, and this is called the revalued amount. And therefore, you'll be able to get your carrying value. And this carrying value, I put a color here, and this colored amount is the one that you will have to show where in your PPE, in your PPE as part of your non-current asset, that is property, plant and equipment 3643440. Okay, that was the item that you have done for your PPE that is completed already. So you are done with your notes to the financial statement. Next is the adjustment. You have done this, right? Done. All this done, number 1. Number 2 done. Just put done, so that we know we have done the checking. Done. And done. Done as well. Now we will go and look at item number 3. Item number 3 is on allowance, or on accounts receivable, which is related to Mfrs 9, where you have a customer that was declared bankrupt, and the outstanding amount of 1,700 has to be written off. So for this 1,700 that has to be written off, there is one journal entry that you need to do to write off as bad debt. And you are also given the expected credit loss allowance for the trade receivable for the year end to be 6732. This is actually the allowance balance at the end of the year. So let's do number 3. So for number 3, I have put this in working 3. For number 2, I put in working 2. You can see my working section there. Yeah, my working section, right. Now I'm moving on to working number 3. And working number 3 is related to the item on allowance and impairment of receivable. Okay, let's have a look of it. Right, this is working 3. Okay, so information number 3 is talking about allowance, increase in allowance for impairment of receivable. But in our case here, that is not just any receivable, but it was a trade receivable. So that is denoted as AFITR, AFITR. Okay, that was just some acronym for it. Okay, then. All right. Now, information number 3 is on bad debts written off. This is on bad debts written off, and information number 3 is on bad debts written off, right? So we are looking at information number 3 on bad debts written off. So what do we write off in terms of journal entry? The information given here, if you can see, information side by side, right? Okay, here is the information. So you are with the amounts at 1,700, you're going to debit your allowance for impairment 1,007. So when you debit your allowance, it has to be reduced in your allowance. And then you need to go and credit your account receivable 1,700. So therefore, this has to be reflected in your accounts receivable, right? You need to go and reduce in your account receivable. You also need to reduce in your allowance account. The second one is the journal entry related to the charge for the year, or to look at whether there is an increase or decrease in allowance. To do that, what you can do is you can first set up your allowance statement of allowance here, put the balance given. So this 3,200 that you have here is actually from here. Beginning balance of the allowance, that beginning balance. This balance is the balance here, okay, as what you did before. And the balance carried down here, 6732, is the one given here, which is, let me just give some highlight here for you. Okay, we are talking about this allowance here. Yeah, let me just highlight this for you. Yeah, that one, right? That one is the 6732, which is your expected credit loss. Expected credit loss, which refers to this. Okay. Expected credit loss, which is the figure here. Expected credit loss, right? So you are given that figure 6732. So this is that set 6732. And the account receivable that was written off as bad debt 1,007 will have to be debited to the allowance, and that has reduced this part as well. Okay, so let me just use a different color for that. Okay. Okay, this one. Right. Right. Therefore, the difference between 1,005, which is 3,002 minus 1,000, and you compare like what you do before this one, with 6732, that will give rise to an increase in allowance, and that is going to be charged as your charge for the year in your SOPL. Your SOPL, specifically, this will be under your admin expenses. Admin expenses. So 5232 here, you need to go and put under admin expense. Admin expense, that will be the item that you will show in your working section. We need to go and show this. This figure will need to be deducted when you calculate your account receivable. So you need to go and deduct this, deducted to account receivable balance. Yeah, account receivable balance. You need to do that. We will be doing that later. Right. And that was the case. So let's do that for our admin expenses first. Okay, for our admin expenses. So we have increase in allowance here, this section that is going to be included in your working section. And now you have no more working actually for your item in your SOPL. Everything has been finalized, and therefore these are going to be the total that you will transfer, but we will do that later. Just want to focus on the allowance first, 6, which is this figure. Remember, we were using that color to differentiate. So this 5232 here. Okay, 5232, this one. Okay, right. So this 6732 should be deducted to account receivable. So meaning that this will go to your statement of financial position. So we go to our statement of financial position here. We will go and check your SOPL in a short while, right? Okay, your statement of financial position in the asset section, account receivable, your account receivable will have to show 329868. You can see that I put in the working here. That is actually account receivable 338,300, which is the balance given in the trial balance, minus the bad debt that was written off because we go and debit allowance for impairment and we go and credit account receivable. And now you need to go and deduct the allowance for impairment credit balance, which is the 6732 given expected credit loss at the end of the year. And you get 329868. Done with that? Yeah, and now we will go on looking at the last adjustment that are given in the question. Last adjustment, this is done already. Okay, done. Now we go to tax. Okay, this tax expense is what you have to go and put in your item. I put done because we are doing it now, right? You're going to put this in your SOPL, right? You're going to put this in your SOPL. So therefore, this one, I'm going to show you some journal as well for in terms of the debit credit. So I provide this journal here. If you can see, these are the journal. So let me just put some different color for you. Okay, the item for, I put blue here for the tax, right? Okay, debit taxation expense with the figure given in the information for credit tax paid. Okay, tax paid here is the one that were given in the trial balance. Okay, let's check. Where is it? This one, tax paid. Okay, credit tax paid because that account was having a debit balance. So now you need to go and eliminate that and to see how much is actually amount that you need to record as tax recoverable or tax payable. So in your case, since what you pay is 220,000 and what was assessed, what you pay was 96,000 much earlier, and you are assessed by the Inland Revenue Board maybe 220,000. So there is still a need for you to pay for the tax to the Inland Revenue Board of 124,000, and that will be called as tax payable because you have paid less and you are assessed more. If the case is vice versa, it will be a tax recoverable and you are going to go and debit that as tax recoverable. But in our case was a tax payable, and this is a current liability, and the tax expense is going to go to the SOPL, and of course that is going to be a line item on its own. But this 1 to 4 will be a current liability, your tax payable. So let us look at the tax expense and the tax payable. So let's go to the SOFP first. So you have this item, and that was tax payable, right? And you have that tax payable. I'm going to put just no color there, and is when tax paid are less than the tax expense. So the difference is called tax payable. If the tax paid are greater, that would be a tax recoverable. So it will be included here as a line item. All right. Okay, now is for you to go and check your last item. What is your last item? Before you do that, I would suggest you to go and transfer all your admin expenses, distribution costs, and finance costs to the correct part. For the other income in this question, there is none because we don't have this item like rent revenue, commission revenue, gain on disposal. So we just put it as it is, right? I just leave it as it is, right? And we are going to check how much is our cost of sale in a short while, but our gross profit should be that figure. And our admin expenses, we already finalized it to 71682 from our working here. Our distribution costs, and after that you have your operating profit after you have deducted your distribution cost. Your finance cost or your finance expense should be put after operating profit. Your investment income has been finalized. Your profit before tax, you should get this. Before we try and do everything, let's do things on the last adjustment, which relates to MFRS 102. As at 31st of December, closing inventory was written down to net realizable value of how much? By 16,150. That is the write down, right? Because it says written down by 16,150. So this one is what you need to go and write down. So under MFRS 102, which is related to Info 5, under cost of sale is going to be adjusted for the write down amount of the closing inventories. So if there is any write down, it is going to be added with that write down amount. And the closing inventories that were here at cost, right, in the trial balance, it is at cost, right? This one, it has to be written down. This 206150 has to be written down with the figure of how much? 16150, write down. So if you have to write down, it means that your inventory need to be restated at the net realizable value. Since the net realizable value is lower than the cost, journal entry wise is this: debit, cost of sale in the SOPL. When you debit means you need to go and add to your cost of sale. Inventories, you need to go and deduct to your SOFP in your current asset, your inventories. So if you do that, under your cost of sale, if you go and debit that figure just now, debit, right here, debit 16150 with the write down. So if you do that, that will not be here, not adjusted here. It will be adjusted straight away to the cost of sale, because cost of sale here would now be 994,900, where that one is as a result of 978,750 plus your item just now. I have put the working here. You can check my working in my boxes here. 206,150, write down 16,150. So therefore, cost of sale will be added with 16,150 information number. What was it? Number 5, if I'm not mistaken. Let me check. Yes, number 5. So that information number 5. Where is it? Your information number 5. Right. Then you are done. Right. There was just a little gap there. It's okay. Profit for the year, yes. And your surplus has been recorded there. Yes. Your total comprehensive income, total profit or loss, and other comprehensive income. This figure, now we go to statement of changes in equity. That figure, which is 764808, this figure here, I put a different color. Okay, we take a different color, green. Yeah, will be included in the retained profit section in the statement of changes in equity. Right. And this is the figure that you need to include. That is the same figure given there. You can check these two figures. And then the surplus we have already recorded. The surplus here we have done earlier, because that was a surplus on the revaluation of your item. There was what? It was the revaluation of land, right? Revaluation of land, remember. And then there were no transfer to ordinary share capital due to redemption or any purchase of share buyback, purchase of shares for cancellation, none. So you can skip that. if you have, do the adjustment. There are no new issue of shares either by way of right issue, none. If you have any issue of share for cash, include that. There are no bonus issue either out of profit or out of any other reserve. Yeah, so normally capital reserve is being utilized first. Our dividend here only relate to dividend on, in our case, only in our case relates to interim dividend because there are no proposed dividend. There are no transfer to reserve being made for the company. There are no transfer to reserve, no such thing, right? And the notes on dividend is here if you want to check, but here we are just talking about interim dividend. We don't have proposed dividend, as I said. So then we can total up the share capital, we can total up the preference share capital. You have the total here. This total will be transferred to the share capital in the statement of financial position. These two total here. This total of reserve in the SOFP, yeah, will be transferred to the statement of financial position under the equity section. So let's do that. Right? You have done the workings correctly. So let's go and check your statement of financial position, your last part of it. So there are no intangible asset, none. No, but you have the investment in your fixed deposit. So include that because no changes. It was still as it is. Your inventory should be at 190,000 because you write down the inventories from cost. Yeah, the cost was written down and now it was written down at the net realizable value is the figure that you need to go and show. Yeah, make sure you show at the net realizable value whenever it is lower, right? And then we are done with that. Cash at bank, it should be 471,700. Why? Because the balance has to be reflected here. If you can see my notes here, with the purchase of the 2 PPE. Accrued income, yeah, we have done that. So we are done with this. Yeah, and there are no prepaid expenses. That was just in case. So these are all the things that you have to settle yourself, right? Yeah, put the share capital balances, total balances from all share capital accounts coming from ordinary and preference shares. Do not include redeemable preference shares because preference shares should be under your current liabilities. In our case, none here. So none, you just put a dash here. You can just skip showing that as well, right? Current liabilities, you just go and paste. We have done that earlier for our accounts payable. Yeah, dividend payable, no dividend is being declared at the end of the year, so no dividend payable from ordinary and preference shares. Tax payable, yes, we have done that. Accrued expenses, yes, there are no accrued income, right? If you have, include that. So the total tally, so you can check all this, right? That's it. You are done with the notes. Yeah, you are done, and you have also done every adjustment given in the question. Yep, all adjustment has been done, right? And these are all done. Everything is done. Okay, with that I thank you for watching. This is question December 2019 Arfa Berhad. I would suggest you do the template first, as I said, then only proceed with other working. With that I thank you. I'll see you when I will see you. Assalamualaikum.